Good morning. I wanted to review yesterday's price action, and there were some pretty straightforward pieces of learning from yesterday. So it'll be pretty easy for us to go over those and talk about it. First, I'll look at the daily chart. The daily chart has been in a bull trend for several weeks now, really since the start of April. Ever since then, we've been pretty much diagonal, right, at kind of a 45-degree angle. Especially the last couple days. The prior 2 days, so Monday and Tuesday, were both these bullish days. When I see a bull trend and then we're starting to get consecutive days that look like this, I start to look for really leaning for a bullish bias when I'm trading the 5-minute chart. So I want to look for early reversals up that might lead to a bull trend for the rest of the day, and especially swing trading, because if the market is going to have a bullish day like one of these days, then I want to make sure I'm able to take a lot of the profit off the table from that. So we identified the bias on the daily chart and looking at the 5-minute chart. So this is how the chart looked that day on Wednesday. So we're looking for early swing trades. The first early swing trade I'll consider would be this buy here. So what have we done? The market opened. It tried to go higher and couldn't go higher at this point. Sold off pretty sharply, pretty quickly. This might just be a test of yesterday's close. So it's selling off pretty quickly to come down and test yesterday's close. And then you get a bull bar, closing above the moving average. What are the odds of buying here? They're probably not too strong because we have been somewhat sideways on the open here, and we did just get these big 2 bear bars. But there's a chance that this is just a failed break below the open of the day. It's a test of yesterday's close, and the market might end up rallying for the next few hours. So low probability, but high potential for reward. So there's some potential for swing traders to buy here. Another spot to be buying would be right here. And now we can start to see another pattern forming, more of a head and shoulders bottom. Right, we have the left shoulder, head, and then here's the right shoulder. We have a head and shoulders bottom. Another swing trade. Right? The market, the bears tried to sell off below the open of the day, couldn't. They tried to sell off below the open of the day here, couldn't. And now we even have a higher low. Now we're getting a bull bar. So that's reasonable for a swing trade long. Now, when I was looking at this, I did actually buy here. And my thought was, if the market continues to go up and the bull trend will good, because that's our trade. If it goes down and we get stopped out down here, the market will probably end up as a trading range day for the rest of the day. Because really this is the breakout point. This is where it should be working. And if it doesn't, then we've already had enough sideways movement that if it comes down again, comes down here, probably the rest of the day will be sideways. And that's what we ended up getting. So this buy should be working. And when it doesn't, that strongly increases the chances that we'll have a trading range day. So my mind switches to more trading range style trading. So it would be buying below like this low down here if we got down here. Then we have eight or 9 bars up here. Probably the first pullback here will be bought. I'll mark that. All right, so limit order buy there. And trading range, we're going to be looking for buying low in the range and selling high. Probably sellers above this high here. So we'll mark like a sell here. And sellers up here above the high of the day. Now if I'm selling up here and the market starts to continue to break out, I'll probably just exit quickly, because even though it's probably a trading range day, I'll pull up the daily bias again and we can see the market had been up strongly for a while. Right, so we're at kind of a critical breakout point, and the market might actually break out here. So if I start to see those signs, then I'll want to get out quickly. Otherwise, this is kind of the optimal outcome, is that we sell here and then we're able to scalp out pretty quickly. So there's some of the limit order trades that have an increased chance of working in a trading range. Another good spot for a scalp, I think, is here for a stop order scalp. So the bulls failed to go higher. Now we're below the moving average, and we've had a double top. So first high, second high. Now we're getting a bear bar and a second bear bar. We're probably wanting to come down and test these lows. Usually when you fail to break out on one side, you want to come back down and test the other side. And so this is a good place for that to occur. This is a good place for the final bulls to finally give up, which looks like they do on this bar. So they give up down to the bottom of the trading range, which is then where the bulls buy again. And you can see that we went up to the top of the range. Another buy is here. 4 bull bars up, bear bar, but this bear bar is small, has a tail on the bottom, and it's above the moving average. Then you get a bull bar here. Good chance that this is going to try to continue to get up to this high or even the high of the day. So buying here, I think that's good for swing trade. I mean, the bar is so small, and there's still a good chance that you'll be stopped out below. So trying to get up to this high, that's a good profit target and stop placement there. So trying to swing trade that, I think, is the way to go with that. And as you are more and more confident the day is a trading range, you just want to avoid trying to buy too high and trying to sell too low in the range. So like buying here, well, this is a second entry long, right? Here's the high, first entry, pullback, second entry long. But we're late in the day, in a trading range day, and the breakout is probably not going to happen at this point. Also, we have the open of the day below, right here. I'm going to draw the line in. The open of the day has an increased chance of being hit late in the day when it's been touched multiple times throughout the day. So it's pretty easy to see all the tests that we've had. Here's the open, we broke through it, pulled back above it, tested it once here, came back, tested it twice, second time, pulled back again to it, tested it here, got below it, tested it here, broke through it, tested it here. And when you see that, when you get 3, 4, 5 tests of the open, then it usually continues to be important. So if I'm buying here, I probably want to get out pretty quick because the market's probably just going to reverse back down and test the open. Oftentimes, you'll see the close of the day actually be at the open of the day. So yes, this is a trading range day. This is one of those cases where we ended at one side or the other. So we didn't come back and test the open at the end of the day. But what we did do, we did get this high somewhat late in the day, and then we did reverse back and test the open. So kind of like after 2 o'clock, if you are getting this kind of day where you're getting tests of the open, then if your breakout is starting to fail, then expect that to come back and try to test the open. So we see this bear rally that happened at the end. If everything here was moved like up 20 points, so if this high was up here, and then we got this price action starting to move down, then I would be more encouraged to sell somewhere down here because that would be trying to come back and test the open. But we're already below the open here, so I'd rather not be trying to sell when I know there's a bias that the market would want to try to come back up and test the open. So to me, the last trade happened probably around here, trying to get a limit order there. So we came into the day with a premise of trying to look for long trades, long swing trades. And I think for Thursday, it's going to be the same plan. So yes, today ended with a bear bar on the 9:30 to 4:15 chart. But if you look at the 24-hour chart, we still closed above yesterday's open. Okay, so this is actually still a bull day on the 24-hour chart. So like the news, they're still going to consider CNBC, the business channels, they're still going to consider this as a bull day because it closed above yesterday's open. Even if this was a bear day in both forms, I would still look for Thursday and Friday to be bullish days. had a good bull trend, you're going to have some of these bear pullbacks in this. Like here was a bear day. The next day, a pretty strong bull day. Couple bear days, then he's got another week or more of buying. So I'm expecting that to continue to happen until something changes. That's when I'm going to continue to expect to happen. So yes, we got a weaker day today, but I'll try to look for buys going into Thursday as well. On the daily chart, we're about 200 points, 240 points away from the all-time highs. I do expect us to get there in the next few months. I mean, how quickly it could happen, I'm not sure. It could happen very quickly, but I would say probably this summer we'll come up here and get these highs. It's not that far away now. I mean, it could do that in a couple days. If we get some more tariff relief news, then we could have some bigger days like this, and we'd be back up to all-time highs in a couple days. But at least I would expect by the end of the summer. So unless we get a big pullback here, we've had enough bullishness. I think we'll probably continue up to the all-time highs. The market wants to see what's at these all-time highs. Do people give up here and the market pulls back, or do people continue to buy and accelerates up at this price? And that's important for the market to see, so I imagine it'll want to come up and test there. Thank you guys for watching, and I'll see you on the next video.